Hi everyone, hope you guys are all having a great day today. In today's video, I'm going to be covering the S&P 500, Dow Jones, Nasdaq, so the whole entire market overall. Go over economic news in terms of economic calendar as well, 10-year treasury, crude oil, so on and so forth, and in terms of interest rates as well from some of the feds that they spoke. Hopefully you guys like the video, hopefully you guys enjoy it, and I do post these videos daily, so if you want to be notified when I do upload these videos, consider subscribing to be notified when I do upload them. First, I'm going to go over the economic news, or actually I'm going to go over the Fed interest rates kind of stuff. So Fed Williams and Bostic don't see any urgency or a mad dash hurry to cut rates. So essentially they basically stated that they want to go to their target of 2%, and they see no rush to lower interest rates, which is surprising because interest rates are still somewhat climbing for the mortgage side, but the Fed interest rate is at 5.33%, give or take, and mortgage rates at the moment have just surpassed 7%. I believe they're at 7.1% mortgage rates in terms of the U.S. So, and home sales technically are not slowing down, supposedly according to the article in terms of mortgage rates. Now we have the 10-year treasury at 4.617%. Again, that's the 10-year treasury, and crude oil, which is important for the CPI/inflation numbers because energy was a big factor of it. Crude oil at $82.47 per barrel. Now I am going to go over the SPY and QQQ, so ETF of S&P 500 and ETF of Nasdaq, do analysis and go over the Dow Jones as well. But before I do that, I want to go over the economic calendar. So for today, April 18th, again, I'm going to cover tomorrow as well. And in terms of the analysis, it gives you like a broad viewpoint of past tomorrow too, but at the same time, it's more specifically targeted for like the next couple of days. So Thursday, April 18th, which was today, initial job claim at 8:30 a.m. Previously, it was 212,000. It was expecting 215,000, but ended up getting 212,000 for initial jobless claims. And Philadelphia Fed Manufacturing Survey, 3.2 previously, 2.5 expected, 15.5 this time around, so huge. And in terms of existing home sales, 4.38 million, 4.17 million was expected and got 4.19 million. And then U.S. leading economic indicators, 0.2 previously, negative 0.1 expected, and negative 0.3 this time around. Now, in terms of tomorrow, April 19th, there's not really much on the calendar. Just 10:30 a.m., Chicago Fed President Austin Goolsbee speaks. And in terms of the analysis side, so in terms of the Dow Jones, I'll just cover it because there's no in-depth analysis for that one fully. Well, it somewhat is actually, to be honest, but not crazy. So we had this resistance, upward trend resistance line, upward trend support level, and we're just basically moving towards it. Now, again, all three, Nasdaq, Dow Jones, and S&P 500, they share the same, in a way, not sentiment, but movement for the 5-year and 1-year chart. So in terms of the 5-year chart, entering or have entered and is in the bearish movement right now, so expecting more downside and hypothetically long term. The 1-year chart as well, same thing, in the bearish movement. I will say in the terms of MACD line, it looks like it's trying to potentially reverse to the upside at one point, but for the time being still in the bearish movement. And then when you get into the 1 month, 3 month, and 6 month, that's when you get more of the trajectories to go to the upside and all stuff. Now the thing is though, given if it wasn't a Friday, I would expect the markets to go slightly up, just because there's not that much news. In terms of the tech side, I know Netflix reported supposedly decent earnings or something, but it's after hours, it's pretty much got a big hit, right? So it went down. In terms of Nvidia, I don't think it was, or Tesla, what was it, Tesla? Still getting knocked down. So these things could drag down, like for example, the Nasdaq. So essentially that combined, it's a Friday. Usually Fridays have, like for example, option contracts expiring, gets dragged down sometimes. Plus there's tensions in the Middle East. So given all that combination, I think there'll probably be a sell-off, not necessarily in the beginning. I think we're going to be going up in the beginning of the day, potentially. Not a guarantee. Like always, by the way, I'm not a professional. So please do your own due diligence and research before buying and selling. But at the end of the day, towards the last few hours, I think we're going to start heading down to specific levels that I'm going to cover. But so to cover the QQQ, which is the ETF for Nasdaq, 5-year chart, like I always showed before, dating back since 2010. Resistance, upward trend resistance level, upward trend support level right here, broke through it through 2020, 2022, got underneath it and heading essentially down. Same narrative as the Dow Jones. 5-year chart shows in bearish movement, so more downside to come hypothetically. And then the 1-year, it's more stronger than the Dow Jones in terms of the bearish movement. So currently, like you can see, it's potentially, I don't know, if it wasn't a Friday, I would assume that it would bounce up. But because it's a Friday, I don't think anybody really wants to hold stocks over the weekend, just in case, because of the tensions again. Otherwise, I think they'll be okay with it. But either way, we're coming up to levels that they could potentially bounce off of. Right now, the level range, so if anything, it would probably be consolidating somewhat between 400. So we're at $423.41, give or take. After hours at $422.10. I would think we would be pretty much consolidating between 420 to 425 for the most part. And we could see a couple times bounced off of support as 421 right here, and then 421, 420, give or take. So there is support there, plus the moving average we looked at earlier in terms of the 1 year chart, I believe. So there is a reason for it to stop there. But the problem is, again, for people not wanting to hold, then that's when we would trickle down to potentially, for the most part, $418. And if it's a drastic case, it'd be going down to $416. But to the upside, if we were to spike up, the max I would see for tomorrow, in my opinion, is around the $428 price point. So the $428 we could see previously went up, try to go up here, like 428, 429, and then right about here a couple times, a bunch of times hit 428, 429, and then plus it would be colliding with the moving average as well. If you think it would be going up like crazy tomorrow, which I don't think it will, but it would for sure get stopped by this upward trend resistance line, in my opinion, because we've seen it a couple times here, and it would be colliding with the moving average as well. So you'd be in the $434, $433 territory. But that'd be drastic. I don't see a reason for that fully. And in terms of the 1 month, 3 month, and 6 month, if you look at it right here, the MACD line again indicates the movement, if that makes sense. It looks like it was trying to cross over to the bullish territory, but in after hours, it's pretty much dipping a little bit more, kind of enforcing that it still somewhat has more bearish room to go. And then again, more bearish at the 3 month, and same thing at the 6 months. So just constantly bearish movement, it looks like. And again, I think because of the weekend, nobody really wants to hold over just because of tensions potentially. I could see not necessarily sell off in the beginning potentially if it goes up kind of thing, but I would say for the last couple hours, in my opinion, I think for sure. But that's just my opinion, by the way, again. In terms of the S&P 500, same thing almost. So the 5 year chart right about here, bearish movement, right? Just for the S&P 500 is a little bit different because it's less aggressive since it's not tech stocks. So it tends to move a little bit slower, but entered in bearish movement, so more downside to come. This channel since 2010 as well, but for the S&P 500, it never broke through it, and a bunch of support levels as well, and then drastic drops throughout the past. But for the most part, heading down to this mid-range potential support level, and if it were to drop down again, like I've covered before, $483, $484, give or take, but it would have to break through moving averages, so on and so forth, support levels and all this stuff. So it wouldn't be a big drop right off the bat, never will be. And unless anything's possible, but it would have to be something crazy. But in terms of 1 year as well, still bearish movement as well. And it just like the Nasdaq / QQQ ETF. Again, I'm looking at the SPY, which are at $500, give or take. But in terms of both ETFs, QQQ, SPY, which is S&P 500 and Nasdaq, they show more predominant bearish movement versus the Dow Jones. And then if we go to the 1 month, it shows just like the QQQ, bearish movement right now going into it. And then the 3 month, same thing, bearish movement as well. And 6 month, going to bearish movement. So it could still pretty much, it might like either open slightly lower, slightly higher, and just pretty much trickle down for the rest of the day, or it might just spike up a little bit to the levels I mentioned before for QQQ. And then ultimately by the end of the day, again, my opinion, it would start the last few hours, start going down, because I don't think they would want to hold over the weekend, but we'll see. Now, in terms of the SPY, pretty much would consolidate around the 500 to, where was it? I think it was $503, I think. I don't know. Oh yeah, it was $503. Okay, so between $500 to $503, potentially, in my opinion, it would consolidate around that price point, and it could potentially still close around $500. But if it were to trickle down, so this is where we see the $498, or no, so 497, 498, and then 495. And if it goes worst case scenario, which I don't think will happen tomorrow, we'd be entering the $493. But that's where I think pretty much we'll stop at. On to the upside, I don't see us passing 503, 504. If we did, we'd be going to $506. But I don't see that necessarily for tomorrow, just because I think, given how, for example, Netflix after hours pretty much took a nosedive a little bit, plus Tesla's still going down. People are pretty much waiting for earnings for Tesla. Like Tesla's a big heavy hitter. What's the market cap for it? The market cap is $500 billion, give or take. So I guess it's not that massive of a movement. It used to be back then, but at the same time, it still could drag things down. Given it's a Friday, all stuff. Plus, interest rates are not going to be cut. But the thing is, the market looks like they're already aware of it and don't really care. But what we shall see, I guess. We shall see. So essentially, either consolidate between $500 to $503. If everything goes well, I guess you could go up to $506. I just don't see that personally. And I think more it would be consolidate $500 to $503, and then by the end of the day, trickle down to $497, $498, and then maybe trickle down to like 94, 95, 93 kind of levels. But yeah, worst case would be 93. I don't think so, but we'll see. But hopefully you guys liked the video. Hopefully you guys enjoyed it. If you do, consider dropping a like. Helps out the channel, so thank you so much for that. And if you want to be notified when I do upload the next video, consider subscribing to be notified when I do upload those videos. Take care, and I'll see you guys in the next video. Peace.